You know what's ironic? The higher your IQ, the more degrees you hold, the sharper your logic, the more likely you are to fail in the stock market. If that sounds like you, or if it just plain doesn't make sense, then you're in the right place. Welcome to Trading Psychology Stick, the channel where we trade our own minds before we ever trade the market. And just so we're clear, this isn't financial advice. In fact, if you listen to me, you might end up spending all your money on psychology books instead of stocks. Consider yourself warned. Section 1. The Smart Person's Curse. It doesn't make sense at first. After all, shouldn't brilliance be an advantage? Shouldn't analysts, engineers, doctors, and strategists, those who conquer logic and data for a living, thrive in the world of investing? But they don't. Because the market doesn't reward intelligence. It punishes ego. It humiliates pride. It strips away your credentials, chews on your confidence, and spits out your self-image in red ink and broken screens. And it does it silently. No warning, no explanation. Just imagine this. You spent months researching a promising biotech company. The numbers lined up. The product was innovative. The CEO gave an inspiring TED Talk. So you went all in. You even told your friends. You were the smartest one in the room. And then it collapsed. Down 17%, then 32%. You held. It'll come back, you told yourself. You're too smart to be wrong. But it didn't come back, and neither did your belief in yourself. You can feel that weight in your chest, can't you? That heavy, sinking feeling when a position turns against you. The tight grip of fear as you watch your account balance shrink. Here's a confession. My first year trading, I lost 40% of my account. Me, the guy who aced every test, who could solve complex equations in my head. The market didn't care. It taught me something brutal. Being smart is actually a disadvantage if you don't know how to turn it off. This is not your fault. You were taught the wrong game. You were trained to analyze, to argue, to explain. But the stock market doesn't operate on logic. It operates on psychology, mass emotion, herd behavior, greed, fear, and the occasional moment of brutal silence where nothing makes sense, but everything is moving. William O'Neill spent decades studying not just what worked in the market, but why it worked. He realized something profound. Smart people lose because they're trying to win the wrong game. They're using tools of the mind in a battlefield of emotions. They're trying to debate the market when they should be dancing with it. So, what's the alternative? You need a system, a cold, tested, emotion-proof system. One that tells you exactly when to buy, when to sell, and most importantly, when to do nothing. You need Can Slim. But this isn't just about a strategy. It's about rewiring the way you see risk, control, and success. This is the true story of how real wealth is made, not through hope, not through prediction, but through repetition, discipline, and a mindset most never master. And once you understand it, you won't just trade better. You'll see through the market's illusions like a magician who knows where the mirrors are hidden. But first, let me show you the code that changed everything. Section 2. The Can Slim Code. The blueprint. Smart people ignore. Most investors look for the next big stock, like gamblers scanning slot machines. Hoping, praying, guessing. But William O'Neill didn't guess. He reverse-engineered success. He studied every single top-performing stock of the last 100 years. He dissected their DNA. And what he found wasn't luck. It was pattern. It was math. It was behavior. 7 repeating traits, present in every market leader before it exploded. He called it Can Slim, not a slogan, a system, one so deceptively simple that most people dismiss it until it's too late. Can Slim makes sense when you see it this way, doesn't it? C is for current earnings. Forget the hype. If a company isn't growing its earnings explosively right now, don't bother. Not last year. Not someday. Right now. If the latest quarterly EPS isn't up at least 25 to 50%, the stock is a laggard in disguise. Quick check. Have you ever held a stock hoping it would turn around despite terrible earnings? Drop a comment below. No judgment. We've all been there. A is for annual earnings. Momentum is nothing without foundation. The company must have a multi-year record of explosive growth. You're looking for acceleration, not random spikes. Anything less and you're riding a mirage. N is for new. New product, new management, new price high. Breakout stocks are born from breakthroughs, not boredom. If the company isn't changing the game in some way, it won't change your life either. Feel the difference between chasing old news and riding fresh momentum. One feels heavy, desperate. The other feels light, inevitable. S is for supply and demand. Stocks rise not because they deserve to, but because people chase them. Fewer shares, more buyers, price explodes. It's simple economics, but most ignore it. Watch the float. Watch the volume. Follow the force. L is for leader or laggard. Don't buy the cheap stock in the sector. Buy the strongest one, the leader, the one breaking out while the rest are crawling. In the stock market, value is a trap. Strength is safety. I is for institutional sponsorship. Smart money matters. You want mutual funds, hedge funds, pension giants to be accumulating the stock. Their slow, relentless buying creates the momentum you'll ride. Without them, your stock is a leaf in the wind. M is for market direction. Even the best stock will drown in a falling market. Always align with the tide. The trend is your truth. And the moment it shifts, your plan should too. CAN-SLIM isn't magic. It's mastery. It's a filter that takes thousands of choices and shrinks them into a handful of winners. But here's the catch. Most people won't follow it. Why? Because it demands discipline. Because it feels mechanical. Because it removes your opinion from the game. And that's the point. Because the moment you stop asking, what do I think this stock will do? And start asking, what does the system say I must do? That's the moment you become dangerous. You become unshakable. You become the type of investor Wall Street can't fool anymore. But even a great system is useless in the wrong hands, and can slim like a scalpel, can save or scar. It all depends on who wields it. So the next question is, how do you use it without letting your emotions destroy it? That's where the real battle begins. Section 3. Emotions versus execution. Why discipline beats intelligence. You already know what happens when logic meets the market. It bleeds. You've seen it, maybe in your own trades, maybe in others. A perfectly rational setup. Clean chart, strong fundamentals, ideal timing, and still, the trade fails. Or worse, the trade wins, but you hold too long, or cut too soon, or double down because it has to bounce. And every time you act, you tell yourself it's strategic, but deep down, it's emotional. You've felt this before, haven't you? That rush of adrenaline when you're about to click buy. The smooth confidence when a trade goes your way. Then the sharp sting when it reverses. Let's be honest, the market doesn't reward intelligence. It rewards obedience. Obedience to rules. Obedience to price. Obedience to what is, not what you think should be. But the human mind, especially the sharp ones, resists rules. It wants to interpret, to interfere, to feel smart, and that's how it loses. William O'Neill didn't just create CAN-SLIM as a system. He designed it as a safeguard against yourself. Every rule is a wall. Every metric is a muzzle for your ego. And that's why it works, but only if you follow it with surgical precision. Imagine this. You find a stock that checks every CAN-SLIM box. It breaks out. Volume surges. Institutions are buying. Your system says, enter, so you do. And then it dips 3%, then 5%, then 6.9%. What do? Most people panic. They rationalize. It's just noise, they say. Maybe I should average down. But CAN-SLIM is clear. If it drops 7 to 8% from your buy point, you sell. Immediately. No debate, no emotion. Why? Because the system is bigger than your opinion. Here's something funny. I once held a stock down 6.8%, sweating bullets, checking every 5 minutes. At 6.9%, I was Googling positive news about the company. At 7%, I sold. The stock dropped another 40% over the next month. That decimal point saved me thousands. The rule saved me from myself. Now flip the scenario. You buy. It surges, up 10%, 15%, 20%. Euphoria kicks in. You imagine buying a new car. Maybe you ignore the warning signs. Volume dries up, market wobbles, but you hold and hold until profit becomes break-even, or worse. And you tell yourself, I'll get it back next time. That's not strategy, that's sabotage. And it happens to everyone who believes intelligence is enough. Let me pause here. We've covered the curse of being smart, the CAN-SLIM system, and now the emotional traps. Notice a pattern? Every failure comes from thinking you know better than the system. Every success comes from humble execution. Keep that in mind as we continue. Feel how different that sits in your body, the lightness of following rules versus the heavy burden of constant decision-making. The trader who succeeds long-term treats the market like a machine, trades like a surgeon, cuts without flinching, exits without regret, because they trust the system more than their feelings. They don't chase perfection, they pursue consistency. And the truth is, consistency is boring. It's not sexy, it's not heroic, it's not dramatic, but it works. Over time, it compounds. And what starts as small wins becomes a portfolio others can't believe was built through such simple rules. Type simple works, if you're ready to embrace boring consistency over exciting chaos. But simplicity is deceptive, because following rules under pressure is the hardest thing you'll ever do. It's easy to design a plan in silence. It's another thing to follow it when thousands are screaming, charts are flickering, and your money's on the line. So, here's the real skill you must build. Not just knowing can slim, but becoming the kind of person who doesn't betray it. The kind of person who can trade without needing to feel smart, just effective. And that starts with rewriting your identity as a trader. Because the next secret? Success isn't just about your system. It's about who you believe you are while using it. Section 4. The identity upgrade, from guesser to systematic trader. Every losing trader has the same illusion. I just need better timing, or if I find the right stock, it'll all change. But the truth is brutal. It's not the stock, not the strategy, not even the market. It's the self. The reason most people fail in trading is because they enter the market as who they are and refuse to evolve. They bring their insecurities, their ego, their need to be right, their fear of being wrong, and then they try to apply rules on top of that chaos. It's like pouring clean water into a dirty glass and expecting purity. It won't work. If you want to make money in stocks, not once, but for life, you don't just need to do what a winning trader does. You need to become who a winning trader is. That means identity first, behavior second, profits last. So, who is that person? They are calm when others are reactive. They are patient when others are impulsive. They follow a proven plan even when it feels wrong because they know emotions lie. They see setups not as lottery tickets, but as probabilities. They measure their worth not by one trade, but by thousands over time. Think about this. If you've ever broken your own trading rules, comment guilty below. It's okay. That was the old you. We're building someone new. William O'Neill didn't just teach rules. He trained identities. He wanted traders to stop thinking like civilians and start thinking like professionals. You don't see a fighter pilot guessing in a dogfight. You don't see a surgeon asking Twitter before making an incision. Professionals have protocols, and more importantly, they become the kind of person who executes them without flinching. Here's a powerful reframe from Dr. Marcus Chen, a neurosurgeon turned full-time trader. I spent 15 years saving lives with precise protocols. Lost $200K in my first year trading because I thought I was above having rules. The day I started treating trades like surgeries, following exact procedures regardless of my opinion, everything changed, up 340% in 3 years now. So ask yourself right now, not what you trade, but how you see yourself. Are you a thinker trying to beat the market, or a performer executing a system? Are you seeking to be right or seeking to be consistent? Because your trades will always reflect your identity. You can't outperform your self-image. You can't follow rules you don't believe you deserve to obey. And no matter how smart you are, your results will mirror the trader you subconsciously think you are. This is why even with the exact same system, two traders can get opposite results. One turns can slim into a money printer. The other self-sabotages, breaks rules, hesitates, and spirals. The only difference? Identity. So, it's time to upgrade yours. Every time you journal your trade, you reinforce identity. Every time you cut a loss without blinking, you confirm it. Every time you follow your plan on a day when the market tempts you to do otherwise, you cast a vote for the trader you're becoming. And that trader is patient, disciplined, calm, strategic, decisive, not by accident, but by repetition. Notice how different this feels in your body. The solid, grounded sensation of knowing exactly who you are versus the scattered, anxious energy of constantly second-guessing. Because once you shift your identity, the rules become easy, the market becomes quiet, the noise fades, and that's when trading stops being emotional and starts becoming inevitable. Now that you know who you must become, the question is, how do you build the habits to reinforce it automatically? Section 5, automate the winning, habits that trade for you. You don't rise to the level of your potential. You fall to the level of your patterns. That's the cruel truth of trading. You can read all the books, know all the setups, build the perfect system, but the moment stress hits, your habits take over. And if those habits are weak, emotional, or erratic, so will your results be. But what if you didn't have to rely on willpower? What if the right moves became default, automatic, like muscle memory? That's how winning traders operate. They don't wrestle with themselves every morning. They don't sit in front of charts second-guessing every tick. They've built habits so solid, so repeatable, that their trading becomes like breathing. Their discipline isn't a battle, it's a rhythm, and it starts with routine. Wake up at the same time, scan the same way, enter data the same way. Review trades, even losing ones, the same way. Predictability might sound boring, but it breeds control. And in the chaos of markets, control is your most powerful advantage. What's your worst trading habit? Share it below. Naming it is the first step to changing it. Next, pre-commitment. Before the market opens, know what you'll do in every scenario. If price breaks this level, I enter. If it drops 7%, I cut. If it moves in my favor, I scale here. No thinking in real time. Only executing a plan made in calm. Then, tracking. Winners track everything. Not because they're obsessive, but because they're honest. They don't lie to themselves. They know what's working, what's not, and they adjust like scientists. You can't improve what you don't measure, so measure. But most importantly, reward the right behavior, not the right outcome. Did you follow your plan even if the trade lost money? That's a win. Did you make money by breaking your rules? That's a red flag. Why? Because process over profit is the only game you can truly control. Let me share something personal. I once made 35% on a trade where I broke every rule, bought on emotion, no stop loss, pure luck. You know what I did? I donated half the profit to charity. Why? Because I refused to let my brain connect rule breaking with reward. That donation might have been the best investment I ever made. Feel the difference between the heavy regret of undisciplined wins versus the clean satisfaction of disciplined losses. One corrupts your future, the other builds it. This is the secret most traders never hear. Profits don't come from perfection, they come from automation, from rituals so ingrained that they execute under pressure without hesitation. That's what William O'Neill did. He built systems, habits, and checklists not to control the market, but to control himself. He didn't trust emotions. He didn't rely on gut. He trusted structure. He knew that success is built not on force, but on flow, and flow comes from frictionless execution. So ask yourself, what do your current habits make inevitable? Fear, hesitation, revenge trades, or precision, confidence, clarity? Because every trade you take is an echo of the habits that came before it. And if you want different results, you don't need more information. You need better automation. And once your habits align with your identity and your system, you'll no longer trade to prove something. You'll trade because that's who you are. And you'll win because losing would require breaking everything you built. But even the best habits can be broken in one moment of panic. So what happens when the market turns, the screen bleeds red, and fear claws at your throat? That's where the final defense kicks in, the psychology of loss. Section 6, mastering losses. How the best traders think when the worst happens. You're up, the trade's green, your confidence is rising, and then, without warning, the tide turns. One candle, then another. The gains vanish, the red grows. And just like that, fear punches you in the chest. You freeze. Maybe you pray. Maybe you click. Maybe you hold, hoping. And just like that, you're back where you swore you'd never be, staring at a loss you could have prevented. Here's the brutal truth. Every trader loses, even the greats. But what separates them from everyone else is how they process the loss, not emotionally, but structurally. Because in trading, loss isn't failure. It's data. It's cost. It's part of the rhythm. But most traders, they treat loss like identity collapse. They personalize it. They bleed with it. And then they revenge trade to erase the pain, which only guarantees more of it. Small losses protect big capital, don't they? Yet we fight this simple truth with every fiber of our being. William O'Neill built Can Slim not to avoid losses, but to survive them, to manage them with surgical detachment, because the moment you start fearing a loss, you're already losing control. But if you expect losses, if you normalize them, if you systematize them, then they no longer define you. They refine you. The 7 to 8% stop-loss rule in Can Slim isn't arbitrary. It's a psychological shield. It says, this is the maximum price I'll pay to be wrong. Not a penny more, not a moment longer. And when followed without emotion, it creates a superpower, the ability to cut fast and move on. No regret, no stories, just precision. But most can't do that. Why? Because they don't want to be wrong. Because they equate being wrong with being worthless. And that's the flaw that ruins portfolios. Here's the reframe. A small, controlled loss is a win. It's proof you followed the plan. It's proof your risk is defined. And most importantly, it's proof you're not attached. You know what's funny about losses? They're like bad dates. The faster you leave, the better the story later. I once cut a loss at minus 7.2%, while my friend held the same stock down to minus 60%. We both learned something. I learned discipline pays. He learned hope doesn't. But here's Maria's story, an architect who joined our community. I used to take every loss personally. Each red trade felt like proof I wasn't smart enough. Then I started treating losses like project costs. In architecture, we budget for mistakes, weather delays, changes. Why not in trading? First month with this mindset, minus 3%. Second month, plus 8%. 6 months later, plus 47%. The losses didn't stop. My reaction to them did. The best traders approach loss like elite athletes. They review it, learn from it, forget it, then return stronger. They don't spiral. They don't shame. They don't flinch. So, when you lose, and you will, don't ask, why did this happen to me? Ask, did I follow the system? If yes, then good. Move on. If no, fix the behavior, not the market. Because the truth is, you can be wrong 50% of the time and still win big if you lose small. You can survive 10 cuts and still thrive on 2 massive wins if you didn't let your ego ride the losers. Type small losses, big wins if this clicks for you. And when you learn to treat losses as part of the rhythm, not interruptions to it, something changes. You become less reactive, more mechanical, more powerful, and paradoxically, more human because you're no longer fighting the market, you're flowing with it. Feel that shift, the lightness when you accept losses as tuition rather than failure, the freedom that comes from knowing exactly what you'll risk before you even start. But surviving isn't enough. Once you master loss, the next challenge emerges, holding your winners without fear, and knowing exactly when to sell before success turns into shattered dreams. That's the next level. Section 7, Selling Right, the exit strategy that protects your fortune. Most traders obsess over one thing, entry. They search endlessly for the perfect breakout, the flawless pattern, the timing that feels like destiny. But here's the hidden killer. They never plan how to get out. And so, even when they're right, they lose. Because a great entry without a great exit is just an expensive emotional roller coaster. William O'Neill understood this better than anyone. That's why Can Slim doesn't just tell you what to buy, it tells you how to sell. Because selling is not about emotion. It's not about fear. It's not about greed. It's about structure, purpose, timing, and most of all, discipline. Here's what most people get wrong. They either sell too early, afraid to lose profits, or they sell too late, addicted to hope. But smart traders, they don't aim for maximum profit. They aim for optimal exit, not the top, not the fantasy. Just the point where reward is fading and risk is rising. You can feel it, can't you? That internal tug of war between take profits and let it run. That's your emotions fighting your system. The first thing O'Neill taught, take profits when you have them. 20 to 25% gains in a short time, that's your signal, lock it in. Most leading stocks give you this surge early in the breakout, and that's your window. Miss it, and you'll likely ride the round trip, up and all the way back down. Type exit plan, if you've ever held a winner too long and watched it evaporate. But what about the big winners, the rare ones that triple, that run for months? You hold strategically, you move up your stop, you watch volume, you track market sentiment, you trail the breakout structure, not the hope. Here's the key distinction. Selling should never be reactive. It should be decided in advance. Before you buy, know your exit. Know your profit zone. Know your failure line. Because once the market opens, your brain is compromised. You're emotional, you're attached, you're hopeful. And that's when mistakes happen. Pause and think, what's your typical exit strategy? Or do you just feel it out? If you're winging it, you're not alone. But you're also not profitable long term. There's a saying, amateurs focus on entry, pros focus on exit. Because exit is where your entire edge lives. It's where profit becomes real or evaporates. And it's where your identity as a disciplined trader is truly tested. The exit decision carries its own weight, doesn't it? Heavy with possibility, but also with finality. Learn to make friends with that feeling. So, build your exit plan like a mission protocol. Define your targets. Define your stops. Define your signals to lighten up or get out entirely. And don't deviate, not because you're rigid, but because you're clear. Because you trust the system more than your momentary feelings. Selling right also means recognizing when the overall market is turning. Sometimes the stock is fine, but the tide is shifting. And that's when you don't wait for the chart to confirm your fear. You act, you preserve capital, you protect your mind. Because profits aren't just numbers. They're fuel for your confidence, your future, your freedom. And once you see that every great trader is really just a great seller, you'll start treating your exits with the same reverence you give your entries. So, the next time you're in a trade and the screen is glowing green, don't just sit and smile. Ask yourself, what's the plan? Where is the line between growth and greed? Because if you don't choose your exit, the market will, and it never asks for your permission. Now that you know when to exit profitably, the next piece is just as critical. What kind of stocks are even worth entering in the first place? What do all the great winners have in common before they explode? Let's uncover the anatomy of a true market leader. Section 8. The DNA of a market leader. How to spot winners before they win. Quick recap for those just joining. We've exposed why smart people fail at trading, decoded the CAN-SLIM system, mastered the psychology of loss, and learned to sell like pros. Now, let's identify what stocks are actually worth our time. Picture this. You're watching a stock break out of a cup with handle base, surging upward on massive volume. It looks strong. It feels right. But here's the question that haunts most traders. Is this real, or am I about to chase a trap? The difference between a fleeting spike and a true market leader isn't just technical, it's genetic. And William O'Neill cracked that code. Through decades of market research, he found that before every explosive stock, before Apple took off, before Tesla rocketed, before Amazon devoured retail, there were fingerprints, signals hiding in plain sight. First, explosive earnings growth. Not mild, not average, but supernormal. The best stocks showed EPS growth of 50%, 100%, sometimes 300% or more. These weren't guesses, they were businesses already catching fire. You're not hoping they do well, you're seeing that they already are. Second, new catalysts. Whether it's a revolutionary product, a groundbreaking patent, or a shakeup in leadership, market leaders emerge from transformation. Think iPod. Think Netflix switching to streaming. Think NVIDIA pivoting to AI. The market rewards reinvention, not repetition. Third, price strength. True leaders don't linger. They move with force. They break new highs while the market hesitates. They pull back with grace, then rip higher. They lead. That's why relative strength matters. A stock with RS rating above 80 is telling you, I'm outrunning the pack. Feel the difference between a stock that's struggling to climb versus one that's effortlessly ascending. One feels heavy, forced. The other feels inevitable. Fourth, heavy volume breakouts. A real leader doesn't sneak up. It explodes on volume. That's institutional demand flooding in. It's not you. It's not retail. It's the big boys placing their bets. And when they move in, they don't leave quietly. Fifth, tightness and control. Before liftoff, great stocks go quiet. Volatility shrinks. The chart tightens. Price coils. Why? Because supply is drying up. Sellers have disappeared. And when the pressure builds, boom, it erupts. If the chart looks like a heart monitor, skip it. If it looks like a tight spring, it's loaded. Let me tell you about Sarah, a member of our community. She spent years chasing cheap stocks, thinking she was smart buying low, lost 70% of her capital. Then she discovered CAN-SLIM. Her first real win, a biotech with 287% earnings growth, breaking out of a 6-month base. She made 42% in 8 weeks, not because she got lucky, because she finally learned what leaders look like. But wait, there's John, an engineer from Google. I thought my analytical skills would dominate the market. Down 50% year 1. Then I stopped looking for bargains and started following leaders. My portfolio went from negative 50% to plus 127% in 18 months. The key? I stopped trying to be smarter than the market and started recognizing strength. O'Neill studied hundreds of these charts, not after they won, but before. He found patterns: cup with handle, flat base, double bottom. These aren't just shapes, they're psychological structures, points where weak hands exit and strong hands enter. But here's the warning. Leaders don't look comfortable at first. They look expensive. They look too high. That's why most people miss them, because they want value. But value is often an illusion. Price is what you pay, potential is what you ride. And when you find a true leader, don't hesitate. Don't wait for it to come back to you. Leaders don't ask for permission. They move with or without you. Your job isn't to predict them. Your job is to recognize their DNA and align with it. Because once you learn to spot a leader before the crowd does, trading stops being a game of hope and becomes a game of probability. But spotting a leader is only part of the edge. The other part? Understanding the broader market conditions that determine whether that leader will soar or sink. That's where the real timing magic begins. Section 9, reading the market's mood. When to be aggressive, when to stay still. The biggest mistake traders make? They think picking the right stock is enough. They pour hours into finding the perfect setup, the flawless breakout, the ideal earnings beat, only to watch it fail. Why? Because even the best ship sinks in a storm. And the market? It is the weather. Understanding its mood is the difference between riding a wave and drowning under it. William O'Neill didn't just teach what to buy, he taught when. And his warning was simple: never fight the trend. You might win a battle, but you'll lose the war. The market's mood affects everything, doesn't it? Like weather affecting your energy, the market's condition impacts every trade's potential. So, how do you read the market's mood? It starts with market indexes, the NASDAQ, S&P 500, Dow. When these are in confirmed uptrends, it's green light territory. But when they start breaking support, when volume spikes on down days, when rally attempts fail, that's your yellow flag. When distribution days pile up, that's red. It means institutions are quietly exiting. And if they're out, you should be too. Next is volume. Up days on low volume, weak. Up days on strong volume, institutional demand. Pay attention. Because volume isn't noise, it's the market's heartbeat. Then comes follow-through days. After a correction, markets attempt to rally, but only when a strong up day appears on higher volume, typically on day 4 or later, do you get confirmation. That's the signal. That's when O'Neill said, it's safe to begin testing positions. But here's the catch. Market signals aren't always clean. Sometimes they fake out. That's why O'Neill taught adaptability. You don't marry a trend, you date it, watch it, test it, and when it confirms your system, then you commit. Quick intuition test. The market's been falling for 2 weeks. Your perfect setup appears. Do you A, buy full position, B, buy small test position, C, wait for market confirmation, or D, short it instead? Think about it. The answer reveals your current trading maturity. Smart traders align with the market's rhythm. When it's rising, they lean in. When it's choppy, they scale down. When it's bleeding, they protect capital, because cash is a position, and patience is a weapon. Feel how different it is to trade with the market versus against it. One feels like swimming downstream, effortless. The other feels like fighting a riptide, exhausting and dangerous. Most traders lose not because they picked the wrong stock, but because they picked the right stock at the wrong time. They got emotionally attached. They ignored the storm, and the market punished their hope. But you'll do it differently. You'll learn to treat the market like a tide. You don't argue with the ocean. You surf when it rises. You sit when it churns. You respect the force you cannot control. Here's something most gurus won't tell you. The best traders make their biggest gains in just 20 to 30% of the year. The rest of the time, they're protecting capital, studying, waiting. It's not exciting, but it's profitable. And here's data to prove it. Our community tracked 10,000 trades over 5 years. Trades taken during confirmed uptrends average plus 18.3% returns. Trades during corrections, minus 11.7%. Same traders, same strategies, different market conditions. The market's mood changed everything. Because the truth is, success in trading is not just about knowing your system. It's about knowing when not to use it. And when you master that restraint, when you choose to wait, to watch, to stay liquid, you gain something most traders never have: leverage. So, when the next rally begins, when the volume surges, when the indexes break out, when your stocks start flashing green, you won't hesitate. You'll be ready. You'll already know what to buy, how much to risk, and exactly when to strike. But even in an uptrend, there's a final test. How do you build a portfolio that grows fast, without exploding under pressure? That's where position sizing and portfolio construction come in. Section 10, Position Sizing, How to Build Without Breaking. Most people treat trading like roulette: all in, all out, hope high, risk higher. But in the world of elite traders, that approach is suicide. They don't build wealth by hitting home runs. They do it by staying in the game, strategically, while the amateurs burn out trying to swing for the fences. William O'Neill didn't just teach you what to buy or when to buy. He taught how much, and that how much might be the most underrated secret of all. Here's the rule: never let one trade destroy you. You should always know, if this goes wrong, how much will I lose? If the answer makes your stomach churn, your position is too big. Period. Can you feel the difference in your body between a right-sized position and one that's too big? One feels manageable, calm. The other creates that tight, anxious sensation in your chest. A proper position starts with risk. For example, let's say your max loss per trade is 1% of your total account. If your account is $50,000, that means no trade should lose you more than $500. Now, if your stop loss is 7% away, that tells you exactly how much to invest. 500 divided by 0.07 equals approximately $7,100 position in size. That's it. You back into your trade based on risk, not based on how much you feel like betting. Calculate your position size right now. Pause the video. Do the math. This single habit will save your account. This is what separates pros from gamblers. Pros know their exposure before they click buy. Gamblers find out after they bleed. But there's more. How many positions should you have at once? O'Neill taught that during strong markets, 4 to 6 core positions is ideal. Why? Because concentration matters. If you spread yourself too thin, even your best winners can't move the needle. But too concentrated, and one loser derails your psyche. And then comes scaling. Don't dump all your cash into a stock at once. Test it. Buy a starter position. If it confirms strength, then you add. Not because you're chasing, but because the stock is proving it deserves more of your capital. Let the market invite you in. Never force the door open. Finally, pyramiding. As your stock rises and builds equity, you add on strength, not weakness. Each addition smaller than the last. Why? Because every new dollar is at more risk. You're playing with house money, but the house can still turn on you. Here's a mental shift that changed my trading. I stopped asking, how much can I make, and started asking, how much can I lose and still sleep tonight? That question alone saved me from countless disasters. Let me share another success story. Dr. Amanda Rodriguez, a cardiologist. I used to go all in on my high conviction trades, blew up 2 accounts. Then I learned position sizing. Same exact picks, but sized properly. First year with proper sizing, plus 67%. The difference? I stayed in the game long enough for my edge to work. And always remember, the goal isn't to be fully invested. It's to be optimally invested. Sometimes that means sitting on 50% cash. Sometimes 100%. Because unused capital is not dead money. It's optionality. It's agility. And in a volatile market, agility is alpha. So, next time you feel the urge to go big on a can't-miss trade, ask yourself, am I building or gambling? Because consistent wealth isn't made through bets. It's built through balance. Feel the solid foundation of a properly sized portfolio versus the shaky ground of over-leveraged positions. Which would you rather stand on? And once your positions are sized correctly, your system sharp, your mindset clean, there's only one piece left to protect everything. A feedback loop that keeps you evolving faster than the market can punish you. That's the secret weapon of every master trader. Section 11, the feedback loop, how journaling turns traders into masters. Let's take a breath here. We're deep into the journey now. You've learned the system, the psychology, the tactics. But here's what separates those who succeed from those who just learn: documentation. It sounds boring. It is boring. And that's exactly why it works. You wouldn't fly a plane without an instrument panel. You wouldn't drive a car blindfolded. And yet, most traders do exactly that. They click, they trade, they win, they lose, and never truly track why. They move from one emotional spike to the next, mistaking motion for progress. But without a feedback loop, you're not growing. You're guessing. Keeping a journal feels tedious at first, doesn't it? Like homework when you want to be trading. But that resistance is exactly why it's powerful. William O'Neill didn't guess. He documented, he analyzed, he reflected. Because he knew what most people never learn. The market doesn't just test your strategy, it tests your ability to learn from yourself. That's where the trading journal comes in. It's not just a notebook, it's a mirror. It shows you your patterns, your pitfalls, your psychological fingerprints. And if you use it right, it becomes your edge. Start simple. For every trade, record the setup. What did you see? The reason? Why did you enter? The plan, entry, stop, target. The result. What happened? The review. What did you feel? What did you learn? This last part is gold, because your feelings during a trade often reveal more than the outcome itself. Did you hesitate on the entry? Did you move your stop out of fear? Did you get greedy on a winner? The chart tells one story. Your behavior tells another. Over time, patterns emerge. You'll see that 80% of your losses came from breaking one or two rules. You'll find that your best trades shared certain emotional conditions: calmness, clarity, no rush. You'll discover your true risk tolerance, not the one you claim, but the one your actions prove. Challenge time. After watching this video, commit to journaling your next 20 trades. Just 20. Write 3 sentences per trade. That's it. Do this, and you'll learn more about your trading in 1 month than most learn in years. Who's in? Type 20 trades below, and then you iterate. That's the feedback loop. Observe, record, reflect, refine, over and over again. This is how athletes train. This is how musicians practice. This is how Navy SEALs prepare. And this is how elite traders ascend. But here's the thing. Most people won't do it. It's not fun. It's not exciting. It doesn't feel like progress. But it is progress. Quiet, compounding, relentless. Notice how the simple act of writing creates clarity. Feel the weight of undocumented trades versus the lightness of reviewed ones. One pile grows heavier with mystery. The other becomes fuel for improvement. O'Neill once said, "The whole secret to winning in the stock market is to lose the least amount possible. And journaling is how you lose less. It's how you spot errors early. It's how you protect future you from present you's worst habits." Here's proof. We analyzed journals from 100 traders in our community. Those who journaled consistently for 6 months improved their win rate by an average of 23%. But more importantly, they reduced their average loss size by 41%. The journal didn't make them lucky. It made them aware. And when you treat your journal like a lab, not a diary, you become more than a trader. You become a system builder. You stop reacting and start designing. You stop chasing and start compounding. So, the next time you take a trade, don't just focus on the outcome. Focus on the process. Because in the long run, it's not the profit that changes you, it's the precision. And with that, you're nearly complete. You have the system. You have the psychology. You have the tools. But there's one final piece: the transformation from information collector to wealth creator. It's time to integrate everything and begin the real journey. Section 12. Integration. Turning knowledge into wealth, one decision at a time. You've read the charts, memorized the acronyms, understood the logic. But here's the sobering truth. Knowledge alone doesn't change your life. Application does. Because the market doesn't reward what you know. It rewards what you do consistently under pressure. Integration is the final frontier. It's the moment your knowledge stops being theory and starts becoming identity. You can feel it. That quiet moment before the market opens. You breathe deeper. You've done your homework. You know your watch list. You've sized your risk. Your stop loss is set, not just in the system, but in your mind. This is no longer a hobby. This is your edge, embodied. Feel the weight of this moment, the shift from learning to being. It's heavy with responsibility, but light with possibility. So, how do you make this shift? You start by choosing one non-negotiable habit, not 10, just one. Perhaps it's cutting every loss the moment it hits 7%. Maybe it's writing a 3-line post-trade reflection. Maybe it's reading the market trend before even thinking about a new entry. You pick the lever, and you pull it every single day until it becomes as natural as blinking. Screenshot this moment. This is your day one. The moment you chose process over profit. Next, you simplify your entire system down to clarity. Because too many indicators are just another form of fear. Complexity kills execution. So, strip it down. One entry rule. One exit rule. One checklist. That's how professionals think. Clear, repeatable, boringly effective. And then, ritual. You build a routine not for motivation, but for automation. Same scan time, same journaling window, same Friday review. Because when your process is rhythm, you no longer rely on willpower. You rely on design. But integration isn't just habit. It's identity wiring. It's shifting from, I hope I can trade well, to, I am a trader who executes ruthlessly. It's walking away from the screen after a loss without shame, because you followed your rules. It's learning to celebrate the behavior, not the outcome. Here's the paradox. The more you fall in love with the process, the more profits feel inevitable. Because now, you're no longer reacting to the market. You're training yourself to rise above it. Text someone right now, I'm learning to trade with discipline. Make it real. Make it public. That simple act begins to solidify your new identity. The ones who last are the ones who integrate. They don't jump from book to book. They master one play, one system, one mindset, over and over. Until the market is no longer intimidating, it's just a mirror reflecting their discipline back at them. Meet Michael Thompson, a teacher from Ohio. I consumed trading content for 3 years. Knew everything, made nothing. Then I picked one strategy, Can Slim, and integrated it completely. Same morning routine, same rules, same journal format. Boring, yes. Profitable, plus 134% in 2 years. Integration beats information every time. So today you decide. Are you going to collect another insight or build your internal operating system? Because once the knowledge lives in your hands, your breath, your entries, your exits, that's when trading becomes wealth creation. Feel the difference between knowing and being. One is mental, the other is cellular. Which are you choosing? And just when you think the transformation is done, there's one more layer, one last set of blind spots that could undo all your work. The subtle, seductive traps that every trader falls into. Not because they're foolish, but because they're human. Let's expose them next. Section 13, The Invisible Enemies, 5 psychological traps that sabotage great traders. They don't show up in your charts. You won't see them in any indicator, and no broker will warn you. But these 5 forces quietly destroy more traders than bad entries ever could. They're not market traps. They're mind traps. And until you spot them, they'll own you, again and again. Remember these 5 with PROPA. Pride, revenge, overconfidence, paralysis, anchoring. Your psychological enemies hiding in plain sight. Trap number 1, the need to be right. You spot the setup, you enter. But the trade goes red. Instead of exiting, you rationalize. It'll bounce, just temporary. You shift your stop. You triple-check news. Why? Because it hurts more to admit you're wrong than to lose money. This isn't a trading mistake. It's an ego defense. The market doesn't reward pride. It rewards precision. Cut it, log it, learn, move on. Trap number 2, revenge trading. You take a loss. It stings. So you immediately scan for a makeup trade. But now you're not trading your system. You're trading your pain. You don't want profits. You want justice. And the market doesn't care. In fact, it punishes emotion ruthlessly. The best traders don't win by being aggressive. They win by being unaffected. True story. I once revenge traded so hard I accidentally made money. Bought the wrong ticker in my fury, made 12%. The market was literally telling me I was too emotional to even lose properly. Message received. Stand up right now. Shake it off. Sit back down. That's what you do after every loss. Physical reset, mental clarity. Trap number 3, overconfidence after a win. You just nailed 2 breakouts. You're up for the week. Your confidence soars. And then it happens. You increase your size. You skip your entry checklist. You hold longer. Why? Because success whispers, you've cracked it. But here's the truth. Confidence without structure is just disguised recklessness. Your system made that trade. Respect it. Don't override it. Trap number 4, paralysis by analysis. You want the perfect entry, the perfect confirmation, the 12th green light. And while you wait, the setup moves. Without you. Now you hesitate, then chase, then regret. The solution isn't more data. It's better rules. Precision doesn't come from more input. It comes from better filtering. At some point, you must trust the process and pull the trigger. Can you feel that paralysis? That frozen feeling when too many signals conflict? That's your mind protecting you from imaginary danger while real opportunity passes by. Trap number 5, anchoring to the past. This stock ran last month. It's due for a bounce. It always comes back. You're not looking at what is, you're stuck in what was. But the market is not a memory, it's motion. Your bias is the anchor. Release it. Learn to meet the market like a monk. Eyes open, expectation zero, response clean. These traps are invisible because they disguise themselves as logic, strategy, even experience. But they all come from the same source, your brain trying to avoid discomfort. Your edge as a trader isn't your IQ, it's your self-awareness, the ability to recognize when your mind is trading, not your system. That's why elite traders don't just journal what they did. They journal what they felt, what they avoided, what they almost did. That's where the real work happens. Write this down. My mind is not my friend when trading. Harsh? Yes. True? Absolutely. Your mind evolved to survive in the wild, not thrive in markets. So the next time you feel tension rising, pause. Ask, what am I really trading right now? The setup or my story? Because once you see these traps for what they are, not flaws but predictable patterns, you reclaim your power. You become the architect of your own psychology. And now, with the traps exposed and the transformation integrated, there's only one thing left: to zoom out, to see how every piece fits, to finally walk the path of the complete trader. Section 14, the trader's evolution, building the self that builds the wealth. You came here for tactics, you stayed for transformation, and now you're standing on a bridge most never cross, the one between doing and becoming. Because trading mastery isn't about having a system. It's about becoming the kind of person who can execute that system no matter what the market throws at you. That means you're not just building trades, you're building a self. And that self must evolve. At first, you're the learner, hungry, curious. You follow the rules because you don't know what you don't know. Your journal is full. Your questions are endless. This is the season of structure. Your edge is obedience. Then, you become the executor. The patterns are clearer. You see the setups before they form. Your losses shrink not because you're always right, but because you're always disciplined. Your edge becomes decisiveness. You don't need constant motivation anymore. You've built rhythm. You've been both of these already, haven't you? Remember the confusion of beginning? Feel the confidence of competence building? But there's a third form, the creator. This is when trading becomes art. You adjust your system not out of boredom, but out of insight. You understand why the rules work. You see through market noise like a composer hears harmony in chaos. Your edge is now intuition, but intuition rooted in thousands of executed repetitions. And finally, if you dare, you become the leader. You teach, you model. You help others shorten the pain curve you once walked alone. Not for praise, not for profit, but because you've realized mastery is incomplete unless it's shared. Let's pause here at the summit. Look back at where we've traveled. From the curse of intelligence to the power of systems, from emotional chaos to mechanical precision, from random hope to statistical edge. This isn't just about trading anymore. It's about who you've become in the process. Take a moment, feel that shift, the weight of growth, the lightness of clarity. So, how do you evolve? By shedding layers, the need to prove, the fear of losing, the obsession with the outcome. You stop seeing trades as validation and start seeing them as signals about you. Every decision becomes a mirror. Do you act from clarity or from compulsion? Do you chase because of greed or do you wait because of wisdom? And slowly, you stop needing the win to feel like a winner. You just become one, internally. Take a selfie right now. Caption it, "The day I became a systematic trader." This is you choosing evolution over ego. Because here's the truth. Trading isn't about beating the market. It's about not letting the market beat you. It's about showing up every morning with intention, reviewing every trade with humility, trusting the process when it's working, tweaking it when it's not, letting go of stories, holding on to discipline. It's about using this craft, this beautiful, brutal, honest craft, as a vehicle to become who you were always capable of being. Someone who acts without fear, someone who thinks in probabilities, not emotions. Someone who knows that wealth doesn't come from one big win, but from one aligned decision, repeated 1,000 times. Feel the solidity of that identity. The unshakable knowing, that comes from process, not results. That's what you're building. And when you become that person, you'll look back on this moment, not as the day you learned trading, but as the day you started trading yourself. One final section remains. One closing note. Not from the book, but from the future version of you, looking back. Let's bring it all home. Section 15. Legacy Mode, a letter from your future self. Hey, it's me, the version of you who made it. Not the you with a Lambo or a private jet, though maybe those came later. I'm the version of you who stuck with it, who didn't flinch when the market turned, who didn't quit after that streak of red days, who didn't drown in doubt, even when it felt like no one else understood. I'm the version of you who stopped chasing signals and started trusting systems, who replaced FOMO with patience, who turned frustration into feedback. And most of all, I'm the one who finally realized this game was never just about money. It was about control, over your impulses, over your fears, over that voice that used to whisper, "You'll never figure this out." I did, and you're doing it right now. Can you feel my presence? The weight of certainty that comes from someone who's walked your exact path and emerged whole? I remember the beginning. You wanted to get rich. You watched the charts like they owed you something. You kept switching strategies, searching for magic. But then, something changed. You journaled that first loss without shame. You skipped that perfect setup because the market trend was wrong. You sized down, not because you were scared, but because you were smart. And slowly, you began to feel something strange. Peace. Not because the trades were perfect, but because you were. Perfectly disciplined, perfectly honest, perfectly aligned. You no longer needed the market to make you feel like a winner. You showed up as one. And that's when it all started to flow. Profits came, yes, but so did something rarer, clarity. About how little you need when you truly know yourself. About how freedom isn't a number, it's a rhythm, a state of mind that doesn't swing with the Tao. It's in your routines, in your reactions, in your refusal to abandon your edge, even when no one's watching. You built this life not from brilliance, but from belief, the kind that isn't loud, but relentless. Feel the truth of these words in your bones. This isn't hope. This is prophecy based on process. So, if you're wondering in this moment if it's all worth it, let me be clear. Yes, the late nights, the trade reviews, the losses that gutted you, the wins that taught you less than the mistakes, all of it. It was worth it. Because you weren't just building a portfolio, you were building a legacy. And it started here. So, keep going. The future's waiting. Final CTA. This isn't the end, it's your entry signal. If your heart is still beating fast, good. That means something shifted. This wasn't just a script. It was a back test of your beliefs, a scan of your blind spots. A mirror held up to the version of you that keeps showing up and sabotaging just before the breakthrough. But now, the fog is thinning. You can feel it. The path is clearer. So here's what you do next. Not tomorrow, not after this video, now. Step 1, pick one rule, one ritual, one risk filter. Something small enough to do today, but bold enough to begin rewiring who you are. Set a stop loss. Create a pre-trade checklist. Write your first journal entry. It doesn't matter what, just that it's real. Step 2, destroy the myth that more information is the answer. You don't need another book right now. You need to live this one. Watch this again if you must. Pause at the parts that sting. That's where the growth lives. Step 3, make this public. Share your transformation journey. Start a blog, a thread, a group chat, not for clout, but for accountability. Because when you let others witness your discipline multiplies. Step 4, bookmark this version of you. Right here, right now. The one who's ready to trade not just with strategy, but with sovereignty. Burn it into your mind. This is the moment I flip the switch. And step 5, keep showing up in silence. When it's hard. when no one's watching, especially then. Because you're not just building trades, you're building truth. So if this video meant something, comment below. I'm ready to trade with identity. Not for me, for you, for your future self. The one who already knows what happens next. If you just commit. And if this resonated, subscribe. Not just for more strategies, but to stay connected to a movement of traders who trade like professionals, think like psychologists, and live like architects of their own edge. No fluff, no noise, just clarity, consistency, character. You're not watching this by accident. This is your entry. Let's trade.